now to shift gears and get some insights on the news that is shaping the overall markets. For that, we'd like to welcome in Dale Smothers, President and CEO at RDS Wealth Management. Dale, thanks so much for being with us on this Friday. I mean, looking back at the year that was in 2025, why do you think this bull market is still met with so much caution?
Jenny, you're exactly right. It was the climbing the wall of worry is an analogy that I like to use. This market has been resilient. The consumer has been resilient. There has been three major factors that have really shaped the market. The overreactions we've seen have come from China, the AI trade, and the Fed. These three things will continue into 2026. And while I do believe that 2026 finishes with a positive year, I would be surprised if we get much above a low double-digit year in 2026. These three stories will be the determining factor early on as to whether or not this optimism continues.
Okay, so which potential catalyst, those being like earnings misses, China headlines, or just unexpected Fed moves, pose the greatest risk to the market stability in 2026, in your opinion? Or is it just the combination of all three of those things?
A combination of all three. They could certainly counteract one another if the Fed comes out and decides that they're not going to cut any longer in 2026, which is the projection, to be real honest. With the new Fed chair, I expect a continued dovish cut to what they would deem to be neutral, which is probably around 2.7 to 3. We were 100 basis points away from that, Jenny. If something changes that, whether it's labor or interest or inflation, rather, any of those changes are going to cause a catalyst to the downside, perhaps in the market. An expected settlement of China's trade war, if that doesn't come to fruition in 2026, it's certainly going to be a headwind for us, not a tailwind. And the AI trade, I think it's starting to mature, and the questions have to be answered. What is going to become profitable? Turning possibility into profit is a must. No longer will we buy the hype or the headlines. We need to see these AI companies making money on these trillion-dollar spending contracts that they're signing.
Yeah, the monetization leg, I do think, will be so critical in just the coming months. But to go back to more of that inflation conversation, focus on the Fed here, what factors do you see causing the Fed to perhaps deviate from their expected policy-driven approach and return to data dependency, as they call it?
I love what you're saying there, Jenny, that the policy-driven. I think a lot of what we're going to see with the new Fed is that policy will shape the data rather than data shaping the policy. And the reality is what could certainly change that is a higher than expected inflation print. This higher than expected inflation print will not be something that's met lightly. Continuing to turn interest rates lower in a higher inflation with a labor market that doesn't move like we expect it to. Perhaps it's AI driven, perhaps it's immigration driven, whatever it is. These two competing pieces of data cause the high wire act that we're seeing with the Fed, and either move on either side, higher inflation or a very stale and a stubborn labor market, will likely cause that market to not react favorably to whatever the Fed decides to do.
Okay, so let's talk three of your stock picks: Apple, Amazon, Nvidia. Let's start off with Amazon. What makes this now an attractive play, despite the fact that now, looking back at 2025, it's actually the worst performing of the Mag 7?
Which is exactly what makes it one of the most attractive plays for us. I believe that if you're going to play the Mag 7, there's a lot of potential that lies in Amazon as well as Apple. Amazon's continuing build out and subscription to AWS, Amazon Prime. These things are all cash flow positive for this company, and they have the cash to spend on existing and newly advanced AI. I believe that as they start to harness the AI, they are going to be a benefactor from this undervaluation, if you will, or maybe it's a lagged trade in the AI race of the Mag 7. I like Amazon, and like you said, Apple. Again, I've been a ringer of the bell for Apple for about 6 months now. When it was not making any AI decisions, it's now started to make some partnership announcements and advancements in its AI. But I think the AI infrastructure here, with the delay of their rolling out of what they're going to do with artificial intelligence, has actually given them a little bit of an upper hand. And because they've been a lagger as well in the Mag 7, I think both of those are good names.
Okay, and I mean, we've seen for for years now, this is Apple's strategy. They're one of those that have like a delayed, really push into any major development in tech, and then they seem to do it better, which is, I think, the genius of their strategy, at least in these later years. But NVIDIA was another name mentioned, and we always check in on NVIDIA. It's one of the most, if not the most important name to this market. So given some of the pullback in shares, I mean, where do you see some potential catalysts for NVIDIA now into the new year?
Sure. I think, Jenny, the pullback in shares really comes from our perspective at least, it comes from this battle between Google and OpenAI. You know, whether Google's going to be the player in the AI race or OpenAI, and clearly Google uses a little bit of a different type of technology. I still believe that the GPU is the workhorse of AI. This lead, if you will, that Google has taken over OpenAI has caused Nvidia to pull back just a tad, but I believe it's more of a game of leapfrog, like we used to play whenever we were children, right? The leader is only the leader for a period of time until the new leader takes place, and oftentimes it was the former leader that takes place. OpenAI is making some big moves here, and with that, Nvidia. I also use the analogy that no matter what horse is racing, if you will, the horses of AI, no matter what horse is racing, it races best, at least to this date, it races best on the track of AI. If you catch my analogy there, the GPU that NVIDIA makes, the track of NVIDIA, that is the fastest track for a lot of these AI horses. And I believe that we as a firm are bullish on this name simply for that reason alone.
Okay, and continuing to speak about AI, how does this build out create a growth story for a more traditionally defensive sector, like, say, utilities?
Yeah, you know, I'm a big fan of utilities right now for our clients that are in this boat where losses hurt them more than gains help them, those who are maybe entering into retirement. Utilities has always been a place that's a little bit more defensive. It's a high dividend paying sector for sure. I like XLU here going into the new year, not only for those defensive properties, but as AI continues to build out, Jenny, it is going to demand energy. And these utility companies are going to be a benefactor from this. Strangely enough, I think utilities could become a growth story even more than they have in 2025 going into 2026.
Okay, last but not least, really quick, wanted to get your thoughts on silver, because this has actually been kind of a standout of this session, the last several sessions, which is a surprising, optimism really that we're seeing into this new year.
As a silver as a commodity at this point, you wouldn't think of silver and gold as being growth stories, but I think silver certainly is, and it will continue. What it's done in 2025, I think it continues in 2026. Our firm is a buyer of silver now, specifically not only for the defensive trade, which we talked about, the defensive trade, but it's got a pretty good offensive outlook as well. And a lot of this is driven by not only global demand for uncertainty, the uncertainty breeds a little bit of run to these commodities, these precious metals, but the conductive nature, the characteristics of its conductivity in electronics also means technology companies are grabbing for silver, and there is a supply and demand imbalance here that is causing silver to rise, and I believe it continues into 2026 as sort of a benefactor, or maybe we call it a roundabout trade in AI with a little bit of defensive nature.
Yeah, really great points. And I mean, you'd be hard pressed to find two better charts than those on a yearly basis of gold as well as silver. I mean, just like a pretty straight shot to the upside, and it's been consistent, reliable, which is, of course, the value that many do seek. But we so appreciate it. Really great summation on what we're seeing in markets today. And of course, as we go into 2026, Dale Smothers, President and CEO of RDS Wealth Management. Thank you so much.